Hey listeners, today we had Matthew Sigel back on the show. Matthew is head of research at VanEck, and he's a longtime friend of the pod with a really good understanding of Solana and its competitors, plus some spicy takes on how everything might shake out. We'll get into some recent crypto-focused political news, Solana Unlocks, and more state of the ecosystem kind of stuff. If you want to hear more from Matthew, he'll also be a speaker at the Blockworks Digital Asset Summit in March in New York. Use the code Lightspeed10 for 10% off your tickets at checkout. We'll get into the show right after this. This episode is brought to you by Renaud Partners, the premier go-to-market advisory firm for early-stage crypto teams. Thanks to them for making this episode possible. Hey Lightspeed listeners, we need your help. Lightspeed is conducting an audience survey to help us get a better picture of who our listeners are and what you want to see from the show. Think of this as our annual review. What do you like about the show? What could we improve on? If you want to contribute, visit the link in our show notes to fill out the survey and help us make a better show for you. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, alongside Mert Mumtaz, as always, and we're joined today, once again, for I believe the third time, by Matthew Sigel, the head of digital assets research at VanEck. Matthew, thanks for coming back on the show.
Gentlemen, good to see you.
So we had you on back in August, and it's fun to have you on now for what is a much more interesting time in crypto. Now, back in August, we talked about VanEck's Solana ETF filing, and moments before we hopped on here, we noticed that a new VanEck ETF filing had hit the Edgar wires. It is an on-chain economy ETF. So this is hot off the presses. I really haven't had a chance to look into it much, but since we have you here, Matthew, I just wanted to ask, what's the deal with the on-chain economy ETF?
Yeah, so this is a brand new filing from us with a preliminary prospectus filed this morning, and caveat that this is all subject to change, but the on-chain economy ETF would be our first actively managed ETF in the space, and it aims to make money by investing in what we're calling digital asset instruments. So these are crypto ETPs like Bitcoin and Ethereum for now, and then digital transformation companies. So these are equities of firms that are advancing the blockchain and digital asset ecosystem. So we're hopeful that we can use our insights on the Bitcoin cycle, our 70-year history of fundamental security analysis to outperform an index of digital asset equities that we've had an ETF, ticker is DAP, D-A-P-P, that is passively managed, runs according to an algorithm, and tries to match this index of crypto pure play equities. This, if it is approved, would be the first where we are, trying to create some alpha in the space by owning the stocks we like and not owning the ones that we don't like. So with a product like that, the holdings, the trades would all be publicly disclosed every single day. So assuming it's approved, look forward to sharing our daily activity and investment theses more fully with you all over the next months and quarters.
What motivated you guys to file for this? First, why didn't it exist before? Did it have something to do with perhaps the previous administration? But just curious, why, to a degen that might be listening, why is this something of note for them? What prompted it?
The day after the election, we had our usual crypto huddle, which is all the 24 or so full-time crypto employees at VanEck. We get together with Jan VanEck, status update on all the funds, all the markets. And Jan issued a directive to product management, and he was like, restart the product development pipeline. So it's very simple that just we're even more bullish on the space with this new administration, time to bring more products to market. And since I've joined 4 years ago, we've grown the team substantially, and we think we have proven some expertise in the space to take a shot at picking stocks more explicitly. So I can see here Solana's at $198 right now, Mert. So we're right at the Rolex Timex barrier, I believe, that 200 level. It's hard not to feel more bullish on the space here heading into 2025.
Mert, you post so much about looking at watches. Have you bought any watches recently? Can you reveal this on the pod?
I bought 2 watches. I will not. I don't know if I should reveal what they are. They're not super expensive, but I have, and that's presumably why the price went down a little bit. And so one thing, actually, this is a good segue. I tweeted yesterday that XRP is the 3rd biggest asset now, and it's almost double the market cap of Sol. It's not quite there. And it seems like it could actually probably make some way towards Ethereum. And I tweeted this, and then Tolly messaged me and said, well, ignore this, focus on the market. And I was like, can you just take a selfie with Donald Trump? Because that's what Brad from XRP did. The watches are at stake here. But there's some facet of disconnect there for me, at least. And Matthew, you would understand this much better than me. What is happening with that? Can you explain to me and perhaps my family members, where I will have to relay this to them, how these assets are being valued in the top, let's say 6 and 5, and how much do fundamentals really play a role versus some of these stories that I'm not aware of, perhaps, that create mimetic value to them?
So we have not filed for an XRP ETF, which I think is a piece of information just by omission, where you can gauge kind of how bullish we are for various tokens. I tend to kind of agree with Tolly on this one, that assume the market is correct at any given moment, and then what drives the price is the incremental news. So I think that Trump has been pretty clear that he wants American crypto projects to flourish, and I think XRP being the first major L1 to be sued by the SEC kind of exemplifies what it means to be an American crypto project that's been under the gun.
Is it just an underpricing based on that lawsuit? Because I guess you could argue that XRP just traded below what it should be trading at for longer because people were unsure about its legal status down the line, whereas ETH didn't have that existential risk. Solana did a little bit, but maybe in a less direct way. So how much of this is just XRP catching up to where it would have been trading had this lawsuit not existed versus anything real in terms of this rally in recent months?
Yeah, I think that's a fair analysis. You look for incremental good news. So everyone could kind of, criticize XRP for not having a stable coin, but now they do. So you have to acknowledge the, I guess, progress that has been made. That said, in our 2025 predictions piece that came out last month, we listed 5 different topping indicators that we would consider as a gauge of when to change our mind on the cycle. And actually, one of our analysts just last night got a text from someone he hasn't spent. One of those topping indicators was texts from random people we haven't spoken to in years asking about degen coins. So one of our analysts last night got a text specifically about XRP, from someone he hadn't spoken to in 4 years. So I am trying not to think of that as a bearish sign for the market overall, but maybe it is a sign that there's a lot of bullishness in the XRP price right now.
Yeah, it is inexplicable to me, but all of my friends that are not related to crypto at all only ask me about XRP. They're like, Jack, is XRP going to go up? And I'm like, why is this not even Bitcoin? It's they love XRP
and ADA. Someone in the cafeteria a few weeks ago, was asking me about optimism for this year. And I asked, this is a back office person, and I asked her what she had, and it was ADA. I said, what would it take for you to buy more? Wasn't really much of an answer to that one.
Everybody knows there's a massive shortage of top senior marketers in crypto, and teams are constantly struggling to get their go-to-market done right. Renaud Partners is the premier go-to-market advisory firm for early-stage crypto teams. They help top founders tell their stories better and build great non-technical teams. They advise founders on all things marketing, tight brand positioning, community building, social media, and building A+ internal teams. They work with some of the top projects across Solana, Monad, Ton, Base, and others. Renaud Partners has built the most elite network of native crypto marketers globally. They create custom expert teams to support founders with transformative strategy work. Some of the best founders, VC firms, and ecosystem leaders in the business trust Renaud Partners to help their teams expedite their marketing success and catalyze their growth. If you're a founder or a VC looking for support for your teams, I highly recommend connecting with them. You can learn more at renaudpartners.com.
Fascinating. But I do still have the same question, which is, I'm not super familiar with these things, right? I run RPC nodes. I don't understand investing too much. And it seems to me in traditional stocks and equities, you somewhat look at the fundamentals, obviously not always, but in crypto, this seems to be basically not the case, except for perhaps Ethereum and Bitcoin. And this is where I want to segue into perhaps some of the on-chain metrics that we're seeing, including on-chain revenues, volumes, TVL, all these things, developers. And it seems like there's a lot of assets in the top 10 that don't necessarily have strong fundamentals, but have good stories for the time being. Do you think that always stays the case in crypto? Like, how do you think about using fundamentals when thinking about these assets?
Yeah, so we kind of differentiate between managing client money and our own, degen stack to the extent that people are doing those kind of personal trades. And with client money, it's very hard to justify buying a coin that doesn't have fundamental support, or where we think that there'll be fundamental support in the future. So our liquid token strategies, we're looking for great doxed teams, people who will put their name behind the project, who are building something on chain that can be better than its TradFi equivalent, where there is a path to generating real economics, meaning fees that people will pay to make transactions on the blockchain. And so for the largest positions, those fundamentals are like already in place, and that might justify, a 10% position or larger than that. For the projects that are more speculative, it's just about position sizing. So something in the 3 to 5% range may have demonstrated some product market fit, and there's a roadmap towards economic value accrual, but maybe they haven't actually started turning on the switch, or the fees are de minimis. And then something like a 1% position, that's more of a moonshot, where we really believe in the team and the vision, the product market fit, and the fees are maybe in front of us. So yeah, to summarize, we need to have conviction that there will be economic value generated, but with the position sizing, we're willing to make a bet that that may materialize in the future. In the case of the meme coins, or some of the kind of dinosaur chains from 2020, 2021, I'd say we haven't really generated conviction on too many of those.
Sorry, I do need to go back to the on-chain ETF, because there's something that's bugging me, because I think I might have misunderstood. When you say this will be, so it'll be the first actively managed, but then two, it will hold equity in crypto companies. I forget the exact terminology you used there. But you said equity. And when you say equity, from a layman's perspective here, what do you mean by equity? Would this be direct on-chain assets of those protocols, or would this be companies that, for example, a Circle or a Coinbase?
Yeah, these are stonks, Martin.
Okay.
Equities, stocks, right? So, and remember, this is all subject to change. The prospectus can change. There's a preliminary prospectus that you have found that we've filed with the SEC, and in that prospectus, we will invest the fund's assets in digital asset instruments, which are crypto ETPs, such as our HODL Bitcoin ETF or ETHV, the Ethereum ETF. And we can also own the equities of what we're calling digital transformation companies. These are stocks, publicly traded companies that are active in the on-chain economy, that are selling goods and services to crypto projects. So that would include, Bitcoin miners, data center companies, things like that.
When VanEck filed for a Solana ETF, people called that sort of a call option on the election and a changing regulatory climate. And I don't know how much you can say, but this sounds to me like a call option on a hotter market for IPOs in crypto, because right now, Coinbase is publicly traded. There's a number of Bitcoin mining stock companies, but the Circles and the Krakens of the world have not been able to IPO. So you would think that there's more potential underlying assets for this ETF to invest in if under, Paul Atkins SEC, more IPOs in the crypto world get approved.
Exactly. We're pretty confident that the market cap in this space is going to grow a lot this year from appreciation of existing winners and new IPOs in the space. We've already seen like Exodus, which is a crypto wallet company, EXOD stock was listed in Canada. They were just able to uplist into the US. I think there's a number of similar equities that are going to get those uplistings as well. Maybe Galaxy. That's going to bring more attention on the research side from the brokers. It's going to make them more attractive to institutional investors because the disclosure regime in the US is much better than in a lot of these foreign markets. So I think it's going to increase the confidence of equity investors.
Okay, and while we're here, I guess it is worth walking down politics street for a second. I do want to get back to Solana and the fundamentals conversation we were having, but shortly before we started recording this episode, some news came out from Reuters that the SEC under Trump is expected to stop pursuing a number of enforcement actions that don't involve fraud. So you would think like Coinbase and some of those kinds of actions that have dragged on for a long time. What's just sort of the significance you see at VanEck for the changing regulatory climate as Trump looks to be inaugurated in 4 days now, 5 days?
One way to answer that question is to observe that this SEC never accepted our Solana ETF filing. So it never was accepted into the Federal Registry, so the clock never started. Gary Gensler's SEC just decided to ignore it and tell us to withdraw it. You can expect us to refile that very quickly after the new administration takes power. You can also expect conversations around staking the Ethereum that we hold in our Ethereum ETF to also heat up. So more product, I think, from our perspective, is the biggest effect. I do think, as you said, that backing off some of these enforcement actions is going to be really positive towards getting more activity here onshore in the U.S. U.S. has been losing share of crypto developers for all 4 years of the Biden administration. It's basically an all-time low. So as those projects get more confidence to build in the U.S., that's going to have an employment multiplier, conference multiplier, all that. The lawsuits like Coinbase and the other enforcement actions out there, they always just tend to settle anyway. It's a question of how long it takes. And the mechanism there is that the folks at the SEC who brought these suits, they're all going to, the chief accountant quit yesterday. Like, there's going to be tons of personnel turnover. And the people who take over these cases are not going to have the same emotional attachment of, I need to go get Coinbase and nail their ass to the wall. They're going to think, I need to clear this off my desk because I didn't start it, and my boss is telling me that our priorities have changed. And I think that is a bullish sign for the market.
I guess I also just want to ask something that's on a lot of people's minds has been, is the Trump inauguration a sell the news event? He got elected through November into December. The prices really pumped across the board in crypto. And then you saw a bit of a drawdown as people realized, legislation takes time to get pushed through. Federal agencies move really slowly. But now, as we're recording this, prices are pumping once again because there's this news of executive orders that are expected to come out on day one. This news that the SEC is going to freeze the enforcement actions. So, just in your capacity, thinking about how to trade this inauguration, like, do you foresee it being a sell the news event, or should people just remain long on all these things?
I think that always depends on where the price is at the time of the event. So we have now had the largest post-election altcoin correction ever. Now, granted, it's a sample size of 3, right? 2016, 2020, 2024, but we've never had a 35% correction this quickly after the election and subsequent all-time highs. That 35% correction coincided with funding rates briefly flipping negative. So that, I think, washed out some of the leverage players and sets up for the next leg of the bull market. So we're in print thinking that we regain all-time highs in kind of late Q1. Maybe there's a sell in May type of phenomenon, and then we can retest and hopefully make new highs in Q4. That's been my personal roadmap. It could very well be wrong, but I think that the washout that we've had pre-inauguration kind of sets us up for a better Q1 and Q2.
Talking about sell the news events, something that's been prevalent on crypto Twitter, most notably, about Solana is the upcoming unlocks. And people have different views on this, and presumably it depends on their time horizon, right? If your time horizon is 10 years, it's probably quite different than if your time horizon's the next week. How do you think about it? What do you make of the FTX unlocks? And what is a framework that you think people should use that's the least incorrect?
Yeah, so the unlocks coming are pretty chunky. So on our numbers, we're looking at close to 1.4 billion of SOL from the FTX estate that would unlock in March, and then about 110 million in monthly unlocks subsequent to that for the next 3 years, from March 25 through 28. And then there's the kind of Solana Foundation sales, which we're reading at least about 25 million a month. So relative to other L1s, that is significant. But I think it also reflects how widespread the investments are into Solana, right? So there's a lot of motivated and smart VC and traditional investors who believe this project is going to succeed and are going to be driven by the fundamentals, I think. So as long as, and we can get into that, but as long as Solana keeps taking share in transactions, fees, just activity on chain, number of apps, then I think people are going to look through some of these unlocks and be more willing to defend their entry price and add on drawdowns. So I think the consensus is that tokens tend to be weak in advance of their unlocks, and then the unlock itself is kind of a by the news. I've seen some recent research that unlocks actually have no explanatory action to price action. So my instinct was, when I saw SOL optimism get really heated in kind of October and November of last year, I just took profits because that's the responsible thing to do, and lowered my position size a bit relative to what I was running in 2024, expecting kind of a more better breadth to the market, right? Last year was really it was BTC, Solana, and meme coins. That was it. Given the change in regulation, feels like it's going to be kind of a more open fight among the projects. The way that XRP ADA acted after the election reinforced that view for me. We also think that whereas 2024 was about L1s, so L1s like performance versus DApps, it was like a 2x delta. If even if that doesn't flip, it's likely to be less pronounced outperformance. So in some of our other strategies, we've kind of taken down the L1 positions, increased the positions in DApps. So still remains a very large and core position in the strategy that I'm running, but it's lower than it was in 2024, and I want to leave some dry powder to buy dips if these unlocks, spark some disorderly price action.
So you said in there that you're seeing the Solana Foundation selling 25 million a month. That seems
was
like
reported.
a high number.
Yeah, someone reported that. I can't confirm it.
Okay, that's just the working assumption you're sort of going off of.
Yeah,
gotcha. Yeah, I mean, we had Dan Smith on the pod a couple episodes ago, and we were talking about like high FDV, low float tokens. And he's like, the FDV is not the problem. It's that you have a crappy product that no one wants to use, which I think is sort of directionally correct when you think about things like FDVs, unlocks, inflation, whatever it is. As far as the FTX estate unlocks, you're right. There's like a huge one coming in March, I believe. And just for my understanding and for listeners, like, could these be similar to the FTX estate sales we saw in 2024, where Pantera came in and said, hey, we'll buy like a huge number of SOL tokens at 50% of the market price right now, and that tends to, Pantera is not going to like dump it all in one clip. Will it be the same thing, or is it a bunch of FTX Solana tokens that are just out there somewhere that someone very well could dump?
So these were purchased from the estate in private sales by institutional investors at a discount to what the market price was at that time. And the institutional investors, couldn't sell them immediately. They had to wait for these milestones. The big one arrives March of this year. At that point, they're free to do whatever they want, and whatever Pantera tells you, they might do the opposite. You have to wait and watch that on chain. So I think that there is, there's definitely a risk that some folks take profits and sell. It kind of depends on where they acquired them at and what their investors are expecting in terms of returns.
Well, with some of those unlocks, they have the option to move staking partners. So if you want some great MEV yield, I'm right here. But let's talk about that actually. So I hope you read our MEV report, but I'm guessing not, because it was pretty heavy. But so we wrote about MEV and the state of it on Solana, the numbers, how it's going, mitigation techniques, etc. I believe this is something we talked about the last time you came on. And I'm curious, based on your state of things, your analysts, what you've seen around the woods, so to say, what do you think about, first of all, the current state of MEV in crypto in general? Do you think it's sustainable? Do you think there needs to be more steps taken for TradFi to be more comfortable? And then two, what do you think of it specifically on Solana, and how would you like to see it change?
I think in general, MEV is a necessary evil. You need to incentivize stakeholders to get in there and arb prices and maximize the use of block space. And if that means paying extra to jump the line, that's part of financial markets. From our last conversation, you may remember we always assumed that MEV would be a much larger percentage of the value accruing to the SOL token than on other chains like Ethereum, and that's due to the computational intensity, the speed of the chain. So I won't say that we're too surprised by it. But it does have some like negative unintended consequences, and some of that has to do with who makes money off of meme coin trading. We can get into that. We did some analysis on like how big the kind of the wash trading issue was at the peak. and yeah, I think it's just it's a necessary evil. It's a bigger part of Solana's economics, but that's also what drives very sophisticated financial stakeholders to come and build and maximize the profits on Sol. So one thing that kind of exacerbates the perceived negativity, and this we've also spoken about, is just how hard it is to parse the data on Solana. So there's just a small handful of folks that are sophisticated enough to understand the consensus mechanism and exploit the MEV opportunity, and as a result, we can observe some centralization in the stake on Solana. So it's small. It's occurring at something like 0.2% of a year, that kind of centralization trend of the stake. But as if that continues, it may start to be a bigger issue for folks.
And you briefly mentioned there that you guys have done the numbers on who's actually making the money from the meme coin craze. Can you talk a bit more about that? What have you found?
Yeah, so when we, at the time that we filed for the Solana ETP, and there was a lot of uncertainty over whether the SEC would approve it or not, and in the end, they didn't even accept the filing. And I was getting quite a bit of trolling on X that Solana activity is dominated by meme coin trading, and most of the meme coin trading was wash trading. Therefore, this is a fraudulent chain, and VanEck, as the issuer, is liable for this somehow, which I'll debunk that in a minute. But we, with our partners, pulled a lot of data on kind of just how big was the meme coin activity as a percentage of activity on Solana. And what we found was that at the peak, so this was like November, 34% of Solana revenues was derived from meme coin activity, 34%. And the equivalent number for Ethereum at the time was about 7%. So, it's considerably larger. We then went back to 2021 during the NFT craze on ETH, and we learned that 20% of Ethereum revenues between July and October of 2021 were due to NFTs. So they're the delta, it's larger, 34 versus 20, but it's not extreme. When we looked into the wash trading, we estimated that last October, November, 41% of meme coin volumes on Solana was wash trading. And if you compare that to ETH, actually it was kind of equivalent. In 2021, 44% of Ethereum NFT trading was wash trading. So larger, right? But it's not, it's not 90%. And when we put all of that together, we assessed that 14% of SOL revenues came directly from wash trading. The equivalent number for Ethereum in 2021 was 9%. Now, whether or not the issuer is liable for that type of fraud, or whatever you may call it, VanEck, the issuer does take on liability by proposing to offer a security, which is the Solana ETP, but we live in a disclosure-based world. And so anyone who read our prospectus, one of the first lines was Solana trading platforms may be exposed to fraud and manipulation. And we included a whole paragraph about how the SEC has identified possible sources of fraud manipulation in the Solana market, specifically calling out wash trading. So, this is a do your own research market. We did our research. We're disclosing what we found, which is about 14% of Solana revenues at the peak, driven by wash trading. But I like to compare it to when Alibaba went public in 2014. And there was this story that 15% of Alibaba revenues was people sending fake boxes back and forth to each other just to generate a positive review from the site. And the investment bankers, the Goldman Sachs, the JP Morgans who brought Alibaba to market, they disclosed that in the prospectus. The market was super focused on it. Alibaba was like, oh, okay, people care about this. We better crack down. And over the next couple of years, it became, a de minimis part of their business as the real parts of Alibaba's business grow. So I'm not overly concerned by 14% of revenues coming from wash trading. It's actually much lower now, given that pump fund activity has come down a bit, and we just look at it as a validation that this is a great blockchain to experiment on, and meme coins were one form of experimentation, and so we're looking forward to the real world apps kind of taking share, and that's already started.
Out of curiosity, one of the thing that interests me about that analysis is obviously it's harder to actually wash trade on Ethereum, especially in 2021 with high gas fees. And so I'm curious if you run a similar analysis on L2 revenues today, or if you have any plans for it, because I believe it's basically just going to happen everywhere when you have cheap fees and somewhat high TPS. A lot of chains go to market with these tap to earn games, for example, and I think this opens the door for a lot of this. So have you done any analysis on that? And actually, while I'm here, have you, I'm very curious what you think about this, because there's the common trope on CT, which is L2s are Ethereum, meaning if they make revenue, let's say an L2 made 2 million, but then paid 50K to Ethereum or something, this is viewed as okay. And the other day, Toli was kind of trolling this and was saying, show me an accounting method in the past 70 years. In which world would this actually count as value accrual to Ethereum? Obviously, he's a little biased. You're more of an independent party, and you obviously much more sophisticated than my man Toli here. How do you think about it?
Well, I don't think we're more sophisticated than Toli. It's a good question that you raise. Have not looked into the economic activity on Base and what percentage is meme coin. I'm not sure if that data is going to be available, but this may also go back to the question of MEV, right? Which is MEV is very opaque. There's a small number of unidentified actors that are earning a lot from it. It's a much bigger percentage of the economic pie on Sol versus ETH. And if I'm kind of just straw manning the objection, it's that everything is more opaque, a bit more opaque on Sol in terms of how to make that. And since MEV is a much bigger share, you're likely to have more critiques than you would on ETH.
The other question too, I do want an answer to that, about how you think about L2 value capture when looking at, for example, when looking at Ethereum as an asset. How do you think about it? Do you think it's like a long-term play where it actually works out, or you think it's concerning? How do you think about it?
I think the ETH L2s need to continue down the decentralization roadmap. Right now, token holders don't benefit from the fees on most of these L2s. They do benefit from fees on Solana, right? So I'm remembering your comment about the high FDV, low float projects, and that folks should avoid them if they're bad projects. But I actually think that it really matters, the high FDV, low float. And when you have a drawdown, those tokens just underperform much, much more dramatically. And meanwhile, in the up markets, the token holders are not directly receiving a share of that economics. So that's reflected in position sizing. For strategy that I'm running, the ETH L2s are so tiny, partially because of high FTV, low float, also because no economics pass through the token holder. I think they can do it at some point, but it's mostly Coinbase making money from Base right now. The other thing, let me just add, right, in our original ETH model, we turned out to be quite wrong on this front. We assumed that ETH main chain would capture like north of 80% of the value of activity on the L2s. So when blobs came along, that really, it flipped the script completely, and now it's more like ETH is capturing only 10%. So I mean, that's real money going to the L2s, but token holders aren't seeing it in large part.
But of that value that Ethereum is capturing, it's still a comparable headline number to what Solana captures as far as value. And in your statistics that you were citing, one that jumped out to me at least was 1/3 of Solana value, I believe it was, comes from meme coins, whereas that number is like 1/10 of Ethereum's value, which maybe speaks to just more breadth of the types of apps that exist on Ethereum, which is a bit surprising to me, maybe because I would think that there would be more room for experimentation on a chain with cheaper fees. So, how do you think through the status quo as far as the types of apps that exist on ETH versus Sol? And I don't know, do you see that gap narrowing with Solana broadening just the types of things that people are doing on chain there?
Yeah, that's a good observation. So on our numbers, the revenues generated from Solana apps are roughly equivalent to the revenues being generated from Ethereum apps, but the breadth is much, much narrower on Solana. It's mostly a handful of either DeFi focused, MEV focused, or meme coin focused apps. Now, some of that may be incomplete. We maybe it's tough to get data for the off-chain apps, but for ETH, there's like 40 different projects that are generating a meaningful level of revenues. On Solana, it's closer to less than 10. I don't really know how to explain that, except that the DeFi. Yeah, I'm not. What do you guys think about that? Why is that?
Well, my guess here would be that first if I were to do it, I would normalize for the actual total number of apps versus the total number of apps that surpass a certain threshold of revenue. But the reality is Ethereum has been around for much longer, right? There's very good blue chip projects of great protocols like Maker, Aave, Uniswap, all these guys. Versus Solana, I would say, really started taking off in 2021 with NFTs, right? And that was actually because Ethereum took off with NFTs, or actually Flow, if you guys remember Flow and NBA Top Shot. And then since then, Solana's really had one cycle, which has been meme coins, right? Because FTX obviously ruined things. And so I would think it's a function of time. And I think it remains to be seen, obviously, what kinds of other use cases pop up. And actually, that's a good segue to some of the more real things, let's say, or less speculative components of crypto. And so recently, or it's not that recent anymore, but Bridge got acquired by Stripe for 1.1 billion. Helio, which is my other company, got acquired by 175 million by MoonPay. And it seems like there's a lot of activity going on in this payment space, PayFi, stablecoins. What do you think needs to happen? Because it's always kind of existed. Like crypto does work for payments. And for example, here in the UAE, I can use it to pay my phone bills and all these random things like buying a house. But I can't really use it in Canada, at least. So what do you think needs to happen? Do you think it's mostly a function of regulation, or is it some other thing that I'm missing about like merchant incentives versus supplier incentives and credit card networks and all this?
2 words: Solana ETP. No, I mean I'm half joking, but like that's going to be one of the signals that the regulatory winds are shifting, and that Solana has decentralized enough to qualify in states like New York, right, where I still can't buy Solana USDC on Coinbase without. Well, I haven't tried in a few weeks, but you got to jump through a lot of hurdles. So I think there's signs that's changing. stablecoins on Solana. Stablecoin supply on Solana is up 40% since November. One thing I didn't mention that it may be, it's one reason why the Sol apps are so robust. The ones that are earning, right, the Jupiters and the Radiums of the world, is that the app keeps a much higher percentage of the economic value on Solana than it does on Ethereum. So, roughly speaking, it's like the apps on Sol are keeping 60% plus of the economic value being created. On Ethereum, it's quite a bit lower. So over time, that should incentivize more app builders to build on Sol. But since a much larger percentage of that economic value is coming through MEV, then the app generally needs to be focused on something which is kind of high frequency, financially oriented, and less so maybe on some of the kind of deepen or social projects where the financialization is not necessarily the thing.
To broaden that as well, I think this relates to maybe some of the regulation stuff we were talking about earlier, because in crypto in general, and maybe especially like non-Bitcoin crypto, there's this assumption, I think, that speculation comes before utility. And so when you hear that 33% of Solana revenue is meme coins, that's part of building out the infrastructure and the necessary just ecosystem so that you can support less speculative use cases that are maybe more serious, or however you want to frame it. With this more crypto-friendly regulatory regime coming in, do you think that crypto is shifting from the speculation phase to the utility phase? Is this sort of like a prove it year for crypto as far as, does this have real world utility?
I hope so, but that hasn't been like the early indication. When you look at where Solana like economic value is being created, it's on Radium, which is now processing 50 to 60% of all DEX volume. It overtook Uniswap in November, and that's an app which is only on Solana, whereas Uniswap is on many different chains. Jupiter is another one, right? So number two in volume in perps, second to Hyperliquid. 60 million in gas fees paid to Solana last year, and obviously Pump Fund, the other big one. So those three are still constituting, most of kind of the Solana app revenues. Those are definitely financial products. I agree with you that that type of infrastructure is required in order to kind of expand the utility of the chain generally. And we're invested. We've disclosed investments in Helium and HiveMapper and some of the DeepIn projects on Sol, and the fundamentals are fine for those projects, but they're not anywhere in the same ballpark as the financial apps.
So talking about Hyperliquid, I'm curious what you think, or if you have any strong opinions. I believe you guys also are in to SUI. Correct me if I'm wrong on that. But how do you think about, so I mean, we talked about Bitcoin, Ethereum, Solana. How do you think about some of these newer ones like Hyperliquid, SUI, and any other ones that I'm missing that you're looking at, perhaps something like a Celestia?
Yeah, well, I got into a lot of trouble on in our last monthly because we called Hyperliquid an L3. You should really be careful about doing that if you're in front of any hype fans. We think that is an intellectually honest way to characterize it for now, and we also noted that most DeFi platforms have not, with rare exceptions, they don't tend to create long-term stickiness. So I'm totally willing to be convinced otherwise, but that's my instinct on hype.
How do you think about these data availability plays, things like EigenDA, Celestia, and I believe there's a Veil and all sorts of these things that are popping up. How do you think about them? Because one of the views from a pure investment point of view is that DA is somewhat of a commodity, and some people agree with this, some people don't agree with this. What do you think? Or actually, do you even think about this? Like, is this are these DA layers and whatnot even at such a stage where TradFi players are taking a look, or does it basically constitute mostly of Bitcoin, Ethereum, Solana?
No, we're taking a look. It's in the investable universe. I think if Ethereum succeeds, I mean, I think it's going to succeed. But if it succeeds, then there should be an opportunity for competition on the data availability layer. Right now, Celestia is not generating any type of meaningful fees, so it's like squarely in that kind of moonshot category where maybe you have a 1% position. But when we look at some of these kind of Solana L2s that are launching, and Eclipse being one of them, that I think it will enhance the interoperability of blockchains generally, and can bridge the gap between ETH and Sol, and Celestia can be a key part of that. But they're basically going to compete on price, as I see it. So they need to announce some big wins, and actually start generating fees in order to prove it. But my instinct is that our instinct is that there is a market for DA, and if it's not Celestia, someone else will probably try to build it.
Last time you came on the show, near the end, we had a bit of a segment that I really enjoyed, where you just talked about everything you think is bad about Solana and everything you think is good about Solana. And so scary, I know, but I went back and found these things. I'm going to bring them back up and just read them out to you. And I kind of want to get your takes on. This was August of 2024. You came on the show. Were you correct in these? Has your perspective on some of them changed slightly? All that kind of thing. So I'm going to start with what is bad about Solana. In August, you said MEV accounts for a lot of cash flow, the spam and chain congestion problem, bad block explorers, Solana consensus design is too complex for builders to understand how it really works, and just generally chewing glass building is really difficult on Solana. When I read that list back to you, what do you make of it?
Most of that is still reasonably true, but there's been major progress on data transparency. So, and maybe we help to catalyze some of that, but some of the kind of data providers in the space have recently added support for Solana. I'm thinking about like Token Terminal as one. And when Token Terminal brought their product to market, they said that they were able to bring, just through ingenuity and innovation, they were able to bring their monthly data costs down by like 90% in terms of understanding and distilling the activity on Solana. That is a huge progress. And I think that from talking to the folks at Solana and talking to Mert, that remains an area of focus, is just making the blockchain more transparent to users. So I'd give a strong marks on that, and that'll help with all the others, right? On the MEV, that as we talked about, that's just the cost of doing business on Sol. If you want to have a chain this fast, you're going to have more MEV. And I think what has improved is that take rate for apps makers. I said before it was like 65%. In some cases, the apps are taking 80% of the revenues that users are paying. It's just much higher than ETH. I think over time, it's going to be a strong draw for apps builders on Sol.
Yeah, that's the take rate is an interesting one I hadn't really thought about before. Are there other problems that you would add a few months later that you weren't thinking about back then?
No.
Okay, so same list. It still stands. You go check out the past episode for him to go deeper into those. I'm now going to say what's good about Solana, and once again, your take. So you said the UX is good, and it Solana sort of focuses on building for consumer applications, like with the Solana mobile and you being a Solana Saga phone user every day.
It broke. I'm no longer using it. I dropped
Yeah, I
it.
remember it shattered. You said you dropped it
Yeah.
on the. It's sad. Well, the seeker is right around the corner, so you'll have a phone. And once again, you said Solana has a clear purpose and a brilliant founder. Um, Solana is focused on practicality instead of just esoteric research ideas. And just generally, there's a commitment within the ecosystem to push the envelope. What do you make of that list?
I think that's all really still true. I think that Toli's engagement and participation in answering questions, raising questions, chatting with Mert, like where everyone can see it, that is hugely valuable. And I mean, we should note that there have been a couple of people like Austin and Ben that have kind of departed for different projects. I think that's part of the evolution of any startup and successful startup, is that it's normal for people to leave and pursue whatever passions. You've also had some additions, Max, right, from Ethereum, I think. But that's something to keep an eye on, right? I mean, we watched at FTX, like when all the people left, what happened right after. I'm not saying that's the case at all for Sol, but like we do pay attention to the personnel and the people and which way they're heading. And I guess that would lead me to say, like, there's some of the chains that are explicitly competing on the same positives that we laid out for Solana have made progress. So Sui and Aptos, grown nicely, solving some of the same problems, good intersection with kind of Web 2 backend, reasonable coding environment. So maybe there's a little bit more competition. I mentioned that about the breadth of the market just being a bit more equal, and that's why my Sol position is a little bit down versus last year. But then again, the macro and the kind of crypto sector are, I think, in better shape for this year, given the political environment and the market. So I think it's going to be another very strong year.
You talked about looking at the personnel and people, and that's actually a very venture-driven mindset. And which brings me to, I believe you guys have been more active within the venture space recently. You have a venture arm. Is that something you can comment on? I believe you guys did, was it Loop and also Sphere? You did a few payments ones, I believe. Are you able to comment on that? Like, what's your thesis on the venture side?
Yeah. So we hired Wyatt Longeron, who ran Circle Ventures, and his partner Juan, and they are just this month going to close on the first VanEck Ventures fund, which is going to be a roughly $30 million fund focused on seed and up to Series A. The thesis is around tokenized capital markets. So that's broad, right? But kind of leading with stablecoin infrastructure, where we have a project called Agora, and Superform was an investment there. That's like an RWA platform. So it's we think it's going to be really helpful to have this entire life cycle, from venture to our alpha strategy, which is kind of small cap, go anywhere, dApps, and then we have like the large cap buy and stake, the largest L1s, which is the one that I'm managing. And having that whole life cycle, being able to talk to each other about what we're seeing, we should be able to share insights and maybe create some alpha. So any founders listening, if you haven't talked to Wyatt, hit me up on Twitter and I'll make the introduction.
Cool. Yeah, I've talked to Wyatt as well. So if you know me but not Matthew, let me know. I can also intro. My final question is going to be a generic one, but I am interested in how you think about this. It'll be two form. One is, assume the year plays out. Trump is obviously in office and all these changes happen. What would you say the success criteria for crypto in the year 2025 is? For when you come back a fourth time, let's say a bit later in the year or early next year, what would you have hoped to see such that some of your theses were proven correct or incorrect?
I was going to answer that with like how many Rolexes has Mert bought. That'll be the determination of success. I mean, like I'm in it for the number go up technology. It's about price. It's about more economic activity happening on open source ledgers compared to permission ledgers, and the way we're going to see that is by token price go up, right? I think all of these L1s are money. They have to be considered money by people who want to use them as collateral and store value there. So yeah, it's sorry to be so simple about it, but it's about price. And I'm hopeful that there's more real world activity, that the breadth of value being created can spread out to some of these DePIN and gaming projects that we've invested in. But if it doesn't, and it's all just because Bitcoin goes to 200K and that ignites animal spirits, that's fine, because this is the sector where when value is created in the financial markets, builders can immediately liquefy that value and go and build something cool. And I think what we're seeing with like AI agents is a good example of that. The market structure in some of these AI agent projects appears to us to be much more favorable than the high FDV low float phenomenon of last year. They're mostly fair launches, retail oriented, less VC participation. I think that's a positive indicator. If that can continue, I think that'll help restore some confidence.
Yeah, I think that's a good place to kind of end it. Some resolutions, some goals to look forward to in 2025. Matthew, I hope to see you again on the show soon. But either way, thank you so much for taking the time. It's been a really enlightening conversation.
Thanks, Jack. Mert.
Absolutely. We'll see you all in the next one.